Official Trump, ticker symbol TRUMP, is a cryptocurrency built around Donald Trump's name, image, and political brand. It is not a share of the Trump Organization. It does not give holders ownership of a business, voting power in government, or a claim on future profits. It is a meme token whose value depends largely on attention, community identity, liquidity, and speculation. That distinction matters because the word official can make this asset sound more powerful or functional than it really is. The branding is official in the sense that the token was publicly promoted by Donald Trump and is connected to Trump-affiliated business entities. But Trump is not an official currency of the United States, and it is not issued or guaranteed by the government. Trump launched on January 17, 2025, shortly before Trump's second presidential inauguration. Its artwork uses the raised fist image and "Fight, Fight, Fight" slogan associated with the assassination attempt in Butler, Pennsylvania on July 13, 2024. The project describes the token as an expression of support and engagement with the ideals represented by that image. Its website also says it is not intended to be an investment opportunity or security. Technically, Trump is an SPL token on Solana. That means it does not run its own blockchain. Solana supplies the network, validators, transaction history, wallet infrastructure, and security. Trump is a token contract operating inside that larger system. Think of Solana as a digital railway. Sol is the network's native asset, used to pay transaction fees and help secure the chain. Trump is more like a branded carriage moving along those tracks. It can be transferred and traded, but it does not operate the railway. That makes Trump very different from Bitcoin. Bitcoin was designed as a peer-to-peer monetary system with its own blockchain, mining process, and fixed issuance rules. Ethereum was designed as a programmable platform where developers can deploy applications and smart contracts. Solana is another programmable network, optimized for fast and relatively inexpensive transactions. Trump is not trying to replace any of those networks. It does not introduce a new consensus system or solve a major engineering problem. The problem it tries to solve is social rather than technical. It gives an online political community a transferable digital object connected to a recognizable public figure. In that sense, it behaves more like a digital collectible mixed with a highly liquid internet meme. People can hold it as a symbol, trade it as a speculative asset, or use it in promotions connected to the project. The project has run holder leaderboards and event-related campaigns, although promotional reward points have been described as having no cash value. Holding the token still does not create a legal claim on Trump businesses or project revenue. If explanations like this help you separate blockchain mechanics from marketing, subscribe to the channel. We focus on what these systems actually do, what users control, and where the risks appear. Now let's make the trading mechanism visible. Imagine that Maya wants to exchange Sol for Trump using a decentralized exchange such as Radium. She first installs a Solana-compatible wallet and transfers Sol into it. Some of that Sol will be exchanged, while a small amount must remain available for network fees. Maya connects her wallet to the exchange interface and selects Trump. This is where the first major danger appears. Anyone can create another token with the same name and ticker. A logo and the word official are not proof of authenticity. Maya must verify the token's exact contract address through reliable sources. After entering the amount, the interface estimates how many Trump tokens she will receive. It also displays possible price impact and a slippage limit. Maya's wallet then asks her to approve a transaction. The wallet is not signing a receipt after the trade. It is authorizing the trade itself. Maya's private key creates a digital signature proving that the wallet owner approved the instructions. The private key should never leave the wallet or be shared with the website. The signed transaction goes to the Solana network. Validators check that the signature is valid, confirm that Maya has enough Sol, and process the swap through the exchange's smart contract program. The blockchain records the updated balances. Maya has less Sol and more Trump, while the liquidity pool's token balances also change. A liquidity pool is essentially an on-chain inventory of two assets. A Trump and Sol pool contains both tokens. Traders take one asset out and put the other one in. An automated formula adjusts the exchange rate as the balance changes. If many people suddenly try to buy Trump, the available Trump in the pool falls and the quoted price rises. If many try to sell, the pool accumulates Trump and loses the asset sellers want in return. The price can then fall quickly. A large trade relative to the pool can receive a much worse average price than the trader expected. That is price impact. Slippage settings provide limited protection by canceling a transaction if the result moves beyond a chosen threshold. They do not guarantee a favorable price. During fast markets, the transaction may fail, or it may execute at the edge of the allowed range. Centralized exchanges hide much of this process. When a user trades Trump on an exchange, the platform may simply update balances in its internal database. No Trump necessarily moves between blockchain addresses for every trade. An on-chain transaction usually occurs when the user deposits to or withdraws from the platform. This brings us to listings. A listing on a large exchange can make a token easier to access. It can add trading pairs, attract market makers, and reduce some friction for beginners. It can also create visibility because millions of users suddenly see the ticker. But a listing is not a government approval, a safety guarantee, or proof of lasting value. Exchanges can restrict trading, pause withdrawals, change supported pairs, or eventually remove an asset. Different exchanges also have separate pools of buyers and sellers, so liquidity can vary significantly between platforms. Trump became highly visible because it combined several attention engines at once. It had a globally recognized name, political symbolism, direct promotion, non-stop media coverage, and access to Solana's existing wallet and exchange infrastructure. The token did not need to build a new network before trading could begin. It could plug into markets that already existed. That visibility can create a feedback loop. Attention brings traders. Traders create volume. Volume attracts exchanges and market makers. New listings produce more headlines, which bring more traders. None of this requires the token to generate revenue or provide a technical service. The reverse loop is also possible. If attention fades, volume can shrink. With fewer active buyers and sellers, spreads can widen, and larger orders can move the price more aggressively. Meme coin liquidity can look deep during excitement and become much thinner when people rush for the exit. Supply distribution adds another layer of risk. Trump has a stated total supply of 1 billion tokens. 200 million were available at launch. The remaining 800 million were allocated to creators and Trump-affiliated entities under a multi-year unlocking schedule. An unlock does not automatically mean every newly available token will be sold. It means restrictions on those tokens are ending according to the schedule. The holders may keep them, transfer them, use them in another arrangement, or sell some of them. Beginners should still pay attention because 80% is a highly concentrated allocation. A large holder's decisions can affect available supply, market expectations, and liquidity. Even fear of a possible sale can influence traders before any sale occurs. Market capitalization can also be misleading here. It is usually calculated by multiplying the latest token price by a supply figure. That does not mean an equivalent pile of dollars is sitting somewhere to support every token. If everyone tried to sell at once, the available liquidity would not allow every holder to receive the last quoted price. The political branding makes this more complicated than an ordinary dog or frog meme coin. Supporters may treat buying as participation in a community. Critics may see a conflict between public office and private financial interests. Pseudonymous blockchain addresses also make it difficult to know who every buyer is, even though the transactions themselves can be publicly visible. Members of Congress have called for investigations into the token's ownership, foreign participation, promotions, and possible conflicts of interest. Those requests and allegations are not the same as a legal finding that fraud occurred. They show why a token linked to a sitting president receives a level of scrutiny that most meme coins do not. Regulation is another area where simple answers can mislead. In 2025, SEC staff said typical meme coins are generally driven by trading and collective sentiment, often offer little functionality, and may not qualify as securities under the framework described in that statement. An SEC commissioner publicly disagreed with making such a broad conclusion and argued that each arrangement should be judged by its economic reality. Even if a token is not treated as a security, that does not make it risk-free. It may also mean buyers lack protections normally associated with regulated securities markets. Fraud, manipulation, misleading promotion, hacked accounts, fake contracts, wallet theft, and ordinary market losses can still happen. So what is official Trump in one sentence? It is a Solana-based political meme token that turns Donald Trump's brand and an online community into a transferable, tradable digital asset. Its visibility comes mainly from branding, attention, exchange access, and liquidity, not from a breakthrough blockchain function. That is why people still talk about it. Trump is a useful case study in how fame can be converted into an on-chain market almost instantly. It also shows why cultural importance, technical legitimacy, exchange availability, and financial safety are four very different things. If you have a question about Trump, political tokens, liquidity pools, or token unlocks, leave it in the comments. And tell us which crypto topic you want explained next.